Today, we shall learn about valuing a real estate, taking an example of a residential house. If you are planning to buy a house to live in, then this video might be of a limited use for you. You would still be able to assess if the house that you are planning to buy is overvalued, fairly valued, or undervalued. However, if you are planning to buy a house from the investing standpoint, then you must watch on. Hey guys, I am Vikram. I am an authorized mutual fund distributor, but I do more than just that. I help people manage their money and put their finances in order. Wealthmatics is all about building wealth using mathematics. Alright. First, let's understand why do Indians love buying the real estate. I can think of many reasons, but the biggest factor of owning a real estate is that it is a hard asset. The one which you can touch and feel, that gives you a sense of ownership. When you know someone who has bought a house for 10 lakhs and sold it for 50 lakhs, the value 50 lakhs gets anchored in your mind. In behavioral finance, it is called an anchoring effect. There is also the availability bias, working in tandem. If you know someone who bought a house for 10 lakhs and sold for 50, you will recall this example almost instantaneously. Both anchoring and availability biases will lead you to believe that there is a lot of money to be made in real estate. But what you are not taking into effect is the actual cost of owning a real estate. We seldom pick up a pen and paper and run through the numbers to find the investing rationale. And today, I'm going to do just that. A real estate asset can be valued by potential capital appreciation, called speculative investing, or by assessing the potential free cash flows in the form of rental, called value investing. Here is an Excel sheet that I have prepared, which will help us with the assessment. We shall only change the cells that are highlighted in gray. Let us go through the input parameters, one by one. This is the total value of the house. It is the final amount, including the registration charges, property insurance premiums, Katha conversion charges, etc. I have considered 65 lakhs. Here we have the yearly rental increment. If you must know, rental has a limit. You can't keep increasing the rent 10% every year. Beyond a limit, a tenant will always find someone who offers a lower rent in the same apartment complex or the area. I would keep a nominal 5%. Here is the expected appreciation in the house value. This is a speculative number. You can do some basic analysis to find a meaningful number to punch in. In the last decade, the increment has been around 3% per year, depending on the city. I would keep a nominal value of 3% here. This is the expected rent, after all the deductions such as maintenance, property tax, etc. Next cell is the rental advance. Since one should not take more than 3 times the monthly rental, as per the new law, I have kept it at 50,000 rupees. Unless you are sitting on a big pile of cash, I would guess that one would take some loan for buying a big ticket house. Let's say it is 40 lakhs. If you take loan, you must input the loan interest rate and the term. I have taken the standard number of 8% and 20 years respectively. Here, we have the input parameters to define your savings from the tax benefits. Put in your current income tax bracket, rebate that you avail on your principal payment, which is covered under the income tax section, 80C. If you have any legal ways to make the rental non-taxable, then select yes here. The opportunity cost is the returns you would have generated from the down payment for the house. Once you make the payment, that money is not available for you to generate any returns. I am taking 6%, which is the average of returns that you could get from a bank fixed deposit in the long term. This is all you need to enter. I believe I have considered most of the factors that would affect your investment returns. Before I reveal the returns, let me explain you a little bit about the right-hand side calculation section. Basically, this section is trying to derive the cash flow for the next 20 years. This is the cash flow from the rental income. This is the tax you save on the maximum loan interest limit of 2 lakhs. The tax rebates will reduce as the time progresses, when the interest becomes less and the principal component goes up. This is the tax you save on the loan principal under section 80C. Lost opportunity is the difference between the income that you could have generated from the down payment and the income you generated from the rental deposit. We have assumed that you have a legal way to avoid tax on the rental income, so this column is showing up as 0. We shall later simulate the returns with tax on rental income too. Assuming that you would sell the house at the end of the 20th year, I have included the final sale amount here. This number is based on the 3% capital appreciation that we have given as one of the input parameters. If you scroll further below, I have calculated the complete amortization schedule of your loan amount for the 20 years. As you can see, the sheet can handle the loan payment term up to 25 years. From this table, I am deriving the yearly interest and the principal component of your loan schedule. Now that you have seen the details of calculations, let me scroll all the way up. Now, assuming all the explained conditions, I shall reveal the final returns, which is about 5.69%. It is good, but not very impressive, isn't it? Let's try one more simulation, assuming that you do not have a legal way to save tax on the rental income. Here you can see that the tax is now calculated on the rental income, depending on your income tax bracket. This tax is after the standard deduction of 30% from your rental income. Let's now check the returns. Wow, it is 4.93%. Now that's an eye-opener. Many a times, we take decisions based on emotions, but many a times, emotions could weigh on your returns. You must run through the numbers to get a view from a neutral standpoint. You never know, numbers could be telling you something that is completely opposite to your feelings. That's all for today. Thank you for watching. If you need help managing your money, you can contact me on vikram@wealthmatics.com or WhatsApp me on 97117-13322. If you like such analysis videos, don't forget to click on subscribe. You can download the Excel sheet from the link given in the description below.